Rolls Royce, which is essentially the reverse. So they've been around for years and years and years, but they've taken a huge hit recently because a lot of their contracts are airlines, repairs, maintenance for aircraft. They do a lot to deal with building airplanes, building engines, and so on and so on. So obviously, with the airlines grounded, the airlines aren't investing in their fleet. There's no maintenance because they're not flying either. So they've been quite a hard hit. They did do a lot of redundancies equally at sort of the start of the lockdown, which obviously then drew the share price down even further. I think it went down to 88 or 80 at one point, and sort of rebounded up to 100. But you look at where it was at previously before the pandemic, and it was at 900. So really, this could, I mean, if you were to hold it long term, it could easily like a 9x. And like, I mean, previous highs are well over 1,000, so it could even go a lot further. But it will be, I think, a long term play, because it's not like airlines where they're not flying and then they are. This will take sort of a long time of building back up, because equally they'll need to rehire workforce, rebuild back up to where they were. But equally, they are government backed. They've got a lot of government contracts, so I think they're safe to invest in my opinion. And I think there could be some really good returns on them.
Yeah, I mean, obviously the downside, you know, they have been hit really hard, and they've also suspended, you know, their dividend, and they don't know when it's actually coming back yet. And the current CEO is leaving next year, but that still gives them a lot of time to find a new one. But Wall Street themselves have undervalued Rolls Royce by 53.5%. So it's not just your general retail traders. You know, the big institutes have also said Rolls Royce is undervalued. And obviously, when the world opens up, you know, the engines as well as the defense projects they have, you know, contracts with Boeing and so on, will start to happen. Obviously, their sales will start going back up. The thing, obviously, with Rolls Royce, you can say they can go back to their original sort of prices, but they're entering the space sector now, which obviously we've seen with Virgin Galactic and SpaceX do really well in hype, but not just hype, just in general, because obviously Cathy Woods with ARK Invest have said, you know, in the next decade, space will become a huge market, probably the biggest. So they've signed a contract with the UK Space Agency. On the goal for the contract is to study future nuclear power to optimize space exploration. So that's a really, really big deal, along with everything else they already currently have. You know, you can say obviously a 9x play, but, you know, I think it's definitely a 1 to 3, maybe 2 to 3 year investment, because we're still a bit unsure about COVID. But I think after 2 to 3 years, I think it will come out of this, and I think Rolls Royce will do extremely well.
Yeah, I agree. To be honest, I've been saying for ages basically how good Rolls Royce is, especially at the current prices.
It's incredibly low. I mean, looking at where we are now, I mean, it just had a little rebound today. I think it dipped under 100 for a little bit and then bounced right back up. So, I mean, maybe that's the bottom. Who knows? I'm not going to call it, but we could be close. Might be a perfect time to buy in, maybe.
I think it's only a matter of time until they start turning over profits again, as well as their dividend coming back. You know, all these little sort of key bits, what people want. I think the share price is slowly going to go up, and each little catalyst and so on is just going to increase the price so much. And at the price they're at now is like ridiculous to what they were. So I think it's a great buy.
Yeah. Well, I think that pretty much sums up our top 4 rebound stocks. Thanks everyone for watching, and hopefully see you next time. Thanks.
See you next time. Thanks, guys.